Okay, thanks Ashwin for joining in with that. Let's move to the other stock we were talking about. Jubilant Foodworks down 5-6% today. There apparently has been a brokerage downgrade from an influential brokerage, but Ravi Gupta from Jubilant is with me now. Ravi, morning. What kind of same-store sales growth are you witnessing now? Do you see the momentum continuing or any signs of sluggishness creeping in?
See, in the Q1, we have witnessed same-store growth of 22%. And compared with the last full year, our same-store growth was 29.6%. So vis-a-vis last year, definitely there is a decline in the same-store growth. But when you look at the absolute level, 22% same-store growth is kind of the best in the industry, whether you look in India or maybe across the countries. So when you look at standalone basis, it is lower definitely because discrete spending is a little down from the consumer point of view. We desired higher same-store growth definitely, and if the economy improves on, if the GDP predictions improves on, we can see an upside there.
Which segments or geographies are you seeing any signs of softening of demand?
See, there is no particular geography within India which is downtrading. The weak sentiment is there practically all across India. There is no particular city or particular region I can ascribe to which is responsible for this slight, you can say, below expectation same-store growth. But if you look at, we had given a guidance for the full year of 18% plus same-store growth, and we are still on target. And we are still confident that for the full years we can achieve a same-store growth of 18%.
Your margins had cooled off a little bit by about a percentage point in the current quarter. Do you see yourself holding margins here at 18% plus, or a little bit more give up is likely?
For the full year, when we talk about FY13, definitely we are expecting about 18% plus margin. And when you look at Q4 to Q1, I'll take you a little backward. Q4 our margins were 18.5%, but when you reduce the Dunkin' Donut initial expenses, which was 0.6%, so our margins for the Q4 last year was about less than 18%. In Q1, despite higher costs in terms of service tax increase, our margins have expanded 18.2%. And we had a pressure on the Q1 on the food cost, about 100 basis point food cost has increased. And there are two reasons responsible for that. First was that we have deferred the price increase looking at the weak consumer sentiment. Typically we take price increase in month of April. Now we have taken a price increase in the month of June. And second reason was that in view of the weak sentiment, we had increased aggression on our promotions, which led to little higher discounting. So net, the food cost was 100 basis points above, you can say, last year numbers or Q4 numbers. And that has been primarily responsible for the slight lower EBITDA. But our full year expectation is still 18% plus, and we are fully confident about that.
Can you just give us a little bit more color on the new store performance and also the rollout plan for the current quarter and the next quarter for Domino's?
Definitely. As far as the new stores are concerned, we are extremely happy with the new store performance, and new stores guidance also we have improved from 90 stores opening for the full year FY13. We have improved the guidance to 100 stores. We are fairly excited with the performance of the new store. We have internal benchmark that the new stores need to have a payback of 3 years or lesser, and we are consistently getting better payback in the new stores, because as our store sales is also improving, same store sales is improving, new store sales is also consistently improving, and as a reason you will notice that our ROCE, return on capital employed, also has been consistently improving. In FY11 ROCE was close to 50%, now it has jumped to 60% in FY12.
What about Dunkin' Donuts? Are you on track to launch those 10 restaurants or 10 stores in the current year, and any early updates you can give us on that?
Yes, we have been positively surprised by the response we have received from the consumer on the 3 stores we have opened for the Dunkin' Donut in Delhi region. The sales have been better than our expectation. The consumer feedback which has been fairly positive. People are liking donuts, people are liking the sandwiches and all the beverages, milkshake, smoothies we have. The early signs are very positive. We are on the track for opening of the 10 stores. Initially, we have earlier indicated that we will be opening stores of all kind. We'll have a high street stores, which are signature stores. They could be mall stores, express store or food court stores. Because first year, by opening all kind of stores in terms of sizes and formats, we are testing out which format works best for the consumer point of view. and which works best for us in terms of profitability. And then finally we'll decide saying that this format will work in India the best in terms of the consumer and for us, and accordingly our future expansion will be on those formats and those models.
What is a reasonable expectation that you have of same-store sales growth going forward? 22% is a respectable number. The base is also higher, but it's lower than what you've got used to and the market's got used to. Do you think 20% plus is sustainable?
See, our guidance, as I earlier indicated, our guidance is still 18% plus same-store growth for the full year. Now, exactly predicting same-store growth, there are nuances associated with it. And on top of it, we are sitting on a higher base, because in FY11 our same-store growth was 37% and last year 30%. So when you look at it, we are sitting on a very high base of same-store sales, and on top of it we are still confident of achieving 18% same-store growth for the financial year 13.
Thanks, Ravi, for joining in with those details. Jubilant FoodWorks, though today is down 5.2%, 60 rupees, but it's had a great run, so maybe just profit taking, or some of the small chinks like slight margin easing or same-store sales growth easing might have led to some down in that stock. But the big story in the mid-cap side is what's going on with these individual names with Tulip Telecom, Pipabhav, Glowdyne, Technoserve, Parshvanath, even stocks like Everon Education just collapsing, maybe because of some positions or client positions being wound up forcibly by brokers. Maybe it's margin calls, maybe it's liquidation of any kind of collateral. We just don't know, but something is happening, otherwise stocks wouldn't have collapsed like this. We'll take a break, come back with the commodity market opening, and also try and get you more insights into what's led to this very sharp sell-off in individual names. The Nifty is below 5100.